start to their fall in October. So my name is Tamara Suvil. I'm a community manager for Chase Bank. As a community manager, my role entails being able to host financial health workshops. So I've been working with S.O.A.R now, I believe for like 2 years since I've been in the role. Might be like our fourth or our fifth session. So always excited to be with you all scholars, talk about money management, talk about finances. We're in for two great classes tonight. We'll be talking about budgeting, saving, goals, in addition to that, building and managing credit. So, a little bit about myself. I've been in banking for 10 and a half years now. This role as a community manager, I started about 2 years ago. I really love what I do, being able to talk about money, right? Who doesn't love money? But loving money is one thing, but understanding how to manage it is another. So it's always a great opportunity when I get to work with S.O.A.R and other organizations similar to S.O.A.R, being able to educate the youth, educate adults. I teach from like young children all the way up to senior adults. So again, we are in for a great class today. Everyone knows a little bit about me. So I'm going to have everyone quickly introduce themselves and then we'll get started. So I'll start with my Hollywood squares. If I mispronounce your name, please correct me. So you'll state your name and then you'll state a fun fact about yourself. All right. So I will start with Savan.
Hi. Can you hear me?
Yes, we can hear you, Savan.
Okay. So I'm Savon and I like to crochet. That's one fun thing
Like to
about
crochet. I like that. What have you made so far?
Well, I've made some shorts and I've made like 2 bags, but I won't say that they look great. But I'm still in my beginner phase, so I'm getting there.
Okay, so some sweaters coming soon, some pillows
Yeah,
coming soon. Okay,
definitely.
great. We'll be looking out for that, Savan. Thank you so much.
No problem.
All right, next I have Brianna.
Okay, hi. I'm sorry. I forgot. Wait, I'm supposed to say a fun fact about myself?
Yes.
Um, uh, I don't really have any fun facts.
What do you
I'll
like to
just,
do?
what do I like to do?
Yes.
Um, I like to help in a charity at a specific one.
Okay,
And
so like volunteer community service work?
yeah, but it's in a specific fun foundation. It's because I have connections to that foundation. So yeah.
Okay, great. So community service is your fun fact. Thank you for sharing. All right, let's see. Who do we have next? I have Anaya.
Hi, my name is Anaya. I play the flute.
Oh, that's nice. The flute. Thank you for sharing. All right, I have, and I'm sorry if I mispronounced it, Kayla.
It's Acalia. That's fine.
Akalia.
I read a lot and I like to write poems.
Reading a drawing. Really? And you also said poems as well?
Yeah, I draw too, but not as much as I read.
Okay, very, very talented. Thank you for sharing. All right, next I have Hector.
My name is Hector, and I like to play the piano.
Likes to play the piano. Okay, so we have a little bit of everything here. A lot of talented, musically talented as well. Thank you for sharing, Hector. Okay, next I have Maggie.
Hello, I'm Maggie and I like reading novels.
Reading novels. What's the best novel you've read so far?
I only read 3 so far, but I'm not finished yet. So I really like Master of Goo. It's just like really interesting, I guess.
Great, great. Thank you so much for sharing. All right, so next we have, is it Mia or Maya?
Are you talking about me?
Yes.
A fun fact? I like to read.
You like to read. Any favorite books?
Not yet.
Not yet? All right. Well, thank you so much for sharing. I want to make sure that I did not miss anyone. Let's see. I think I have all the names here. Did I miss anyone? All right, great. Thank you all so much for sharing. So you all will see here on the screen today's agenda. So we already went through introductions. The first portion of our evening, we'll be talking about goal setting, budgeting, saving. Then we'll take a 10-minute break. When we come back, we'll be talking about building and managing credit. And then we'll save some time at the end for questions. And after 8, from 8 to 8:30, you all are optional, but welcome to stay for additional Q&A from the entire S.O.A.R team. All right. So today we'll be talking about starting where you currently are right now when it comes to your financial journey, your ideas when it comes to finances, when it comes to budgeting. We'll be talking about setting some goals. We'll be talking about making sure that those goals are actually smart. So we'll be breaking down that format. We'll be talking about how to create a budget. And then when it comes to credit, how to build credit, how to manage credit. I'm sure that you all have either watched some like TikTok videos or some YouTube videos and seen a lot of information around credit. So we'll be spending some time talking about that as well. So if you are all ready to get started, can we get a thumbs up if you are ready to get started? All right, I see a lot of thumbs coming in. I'm just going to pull up the presentation for us. And again, feel free to use the chat feature while we are going through this session. This will be very interactive, so I will be asking some questions. In your Google Classroom, you should have access to the journal that we'll be using today for a lot of the activities as well. So one more thumbs up that you have access to the journal, the financial journal. Savon, have your hand raised?
I had a question. Like, do we have to write in it? Because I can't necessarily write in mine.
So the digital format does give an option where you can click in it. So if you're not able to click on it, then pen and paper is fine as well.
Okay, gotcha.
Just to be able to follow along with the activities. Great question, Savon. Thank you. Any other questions? Any other questions? And thank you, Latoya. Latoya also put the journal in the chat as well. So that's another way to access it. All right, so let's get started. So we'll be talking about your financial journey for all of you that are young adults. First question that I have for everyone, right? When you think about when you are traveling, right? For example, maybe you get in a car, we go someplace, and we do not know where we're going. What tool do we use? Feel free to come off of mute, raise your hand, or put in the chat. What tool do we use when we do not know where we are going? I have someone coming off of mute to share. GPS. So I heard GPS. Who said that? And I also see Savon also put it in the chat as well. Yes, we use the GPS, right? GPS does what for us? Gives us directions. So today we'll be talking about goals to give you directions on your financial journey. Right. Full disclosure that I do want to read for everyone because all of us are on different financial journeys. This class today is for informational and educational purposes only. The views expressed during this event, they may differ from other employees and departments at JP Morgan and Chase, and the views and strategies described, they may not be appropriate for everyone. So what that means is that although myself as a community manager, I provide the financial education, you may sit down inside of a branch to sit with, like, for example, like a banker, and the information may be slightly a little bit different because they're specifically providing information when it comes to products and services. I'm providing information overall when it comes to money management. Okay, so any information that we share, they're not intended as specific or advice or recommendation for any individual. You should always consider your needs carefully and objectives before making any decisions, and always consult the appropriate professionals. Outlooks and past performances, there are not guarantees of any future results. All right, so we're going to start with our first activity, which is in the journal on page 1. We have 3 questions. As I said earlier, we're going to start where you are. So right now we are getting started. We're in the car, right? We're going to use our GPS to get us to where we are going. So when you get to page 1, there are 3 questions. It's going to ask you, have you ever set a financial goal? Have you ever created a monthly budget? And have you ever checked your credit score? So you are going to mark off for this activity, yes or no. In the booklet, it'll say yep or not yet. And then we'll take about like a minute for that. And then we'll come back together and then we'll discuss it as a group. Okay. Any questions on this first activity? Feel free to raise your hand if you have any questions. All right. Time is starting now. So we'll give it to about 6:45. And again, you're just checking off whether or not you've ever set a financial goal, if you've ever created a monthly budget, and have you ever checked your credit score? All right, we probably have about another 30 seconds. All right, 6:45 on the dot. Okay, so I'll ask the questions and then you'll use your reaction buttons to raise your hand or use a thumbs up for each question, right? So if you did set a financial goal, you would put your hand up or a thumbs up, okay? So first question, have you ever set a financial goal? Thumbs up or raised hand. Have you ever set a financial goal? Right? Also, yes, please feel free to use the chat as well. All right. So we have about 5, 6 so far. Okay, great. All right, next one. Have you ever created a monthly budget? So we'll put our hands down and then we'll put them back up. Have you ever created a monthly budget? Have you ever created a monthly budget? Okay. 3 hands raised so far. Okay, so I'll put a thumbs down in the chat. All right. All right, and then last one. Have you ever checked your credit score? This one we can give, if we've never checked that credit score, thumbs down. Thumbs down if you've never checked your credit score. Okay, so we have some thumbs down, couple thumbs down. All right, and that is okay. That is completely okay, right? Not yet, right? When it comes to the credit score, maybe not yet, but definitely soon for a lot of you. All right, so thinking about the activity that we just did and we talked about your financial journey, think of every step of every journey is knowing where you are right now. If we were to get inside of an Uber, we were to get in the Lyft, right? We always have to tell that driver where we currently are and where we would like to go. With having that foundation, you can look at all of your options and you can plan for a smooth journey. Right now, a lot of you may already have ideas about your future, or you may still be figuring that out. Either way, the more that you know about the money decisions you'll likely have to make along the way, the easier it will be for you to plan for those costs that you expect and also for those costs that you don't expect. Okay. So when it comes to starting where you are, always knowing it is never too early to start saving. And I'll repeat that. It is never too early to start saving. Right? Think of a time that you saved for a goal, right? Something that you wanted to buy, maybe for your birthday, maybe it was something for the holidays. How did you approach that goal and what was the result? This is actually going to be our next activity, which is on pages 2 and 3 of our journal. And then we're also going to think about, why is saving important to us? Okay, so that's a few things for us to jot down. We're going to think about a time that we had a goal, that we saved up for something, how much, and how did we approach that goal? And then what was the actual result? So whether or not whatever it was that we were trying to purchase or buy, were we able to meet that goal? And then the second question we'll be answering is, why is saving important? So again, this is on pages 2 and 3 in your journal. 2 and 3. If for some reason you do not have access to the journal, feel free to write down or pen and paper as well. Okay, so this activity, will take 2 minutes for this activity, because it could take a little while with answering the second question. All right, so page 2 and 3. You'll see on page 2, you'll see where question number 2, and then on page 3, question number 4. Any questions? Feel free to raise your hand. Any questions? All right, so we'll give it till 6:51. 6:51. If you have any questions in between, please feel free to raise your hand and let me know. All right, we got about a little less than a minute left. All right, it is 6:51. So we will take 2 brave souls to share with us from page 2, the time that you saved for a goal, how did you approach that goal, and what was the result? Who would like to be our first brave soul? Let's see. All right, Maggie. Maggie, take it away.
So the first time I actually saved was to buy a phone. And like how I saved was, I was only a child before, so I like got Christmas money, New Year's Eve's money, like money where you get for allowance and stuff. And the end result was I got robbed.
Oh no, Maggie, we're so sorry to hear that. We're so sorry. So you built up the money to get the phone and then you weren't able to get the phone. We're so sorry
Yes,
to hear that.
basically.
But your approach definitely was sounds like a great approach. You said that you took money from Christmas money, New Year's money, allowance, put that all together to be able to get the amount for the phone. And I'm assuming the phone was expensive. Did you eventually get the phone?
Eventually, my parents had to give me handy down from my brother, but then I brought my own phone. So
And you brought your own
yeah.
phone. Well, thank you so much for sharing, Maggie. And again, we're sorry that that happened. All right. Who is our next brave soul? Let's see. One more person to share a time that you saved for a goal. Okay, Akelia.
So recently it was my mom's birthday and I was trying to get her this Michael Kors bag and it was really expensive. So what I did was stop spending money on unnecessary stuff. Like there's a Dunkin' like 7 minutes away from my house, walking, and I would stop there every day after school, even though I had donuts at home. So every time I would think of stopping at Dunkin', I would take that money and put it in a jar. And I
Akelia.
hurt the bag.
Great share. We'll be talking a lot about that today too. Those needs versus the wants, knowing when to spend our money, when to save our money, and other ways how to save and budget our money. So I'll definitely will come back to you a little bit later when we're on our saving and budgeting slides for that example. But thank you so much for sharing. Okay, so now we have one more question, and we'll get one bracewell for this one. Why is saving important to you? All right. Oh, we got two. Okay, great. I love the engagement. Okay, so Vaughn first, and then Brianna.
Okay, so saving's important to me, and like one example that has happened as of recent was I was watching my mom, save for our home that we were buying. This is the first home that we bought, and so we had to cut back on certain things that we were doing, and so that meant no McDonald's every other week. Like we had to stop doing certain things that we may have typically done, and so saving's important to me because it allows you to understand like your needs versus your wants, and if you're trying to reach a goal of something, how to be like money responsible. So that's why it's important to me.
Thank you so much for sharing, Savannah. I love how you even talked about money responsible. And a lot of times with money management, that's the first thing. If we're responsible with money, right, all the things that we need will come first, and the things that we want will come later. So thank you so much for sharing. All right, so we got a lot of volunteers. Okay, so Brianna and then Maggie.
Okay, so for me, I said that saving is important to me because I have anxiety. So money is really like it gives me anxiety. So I said it allows you to create a timely goal, which will allow yourself to mentally not stress about money at the moment. It also allows you to improve your procrastination and lets you thrive.
Thank you so much for sharing, Brianna. You know, I always say at a lot of my workshops, I say we talk so much about physical health, we talk so much about mental health, but financial health is equally as important, right? They all go side by side because when you think about financial health, right, you just mentioned it. Sometimes not having the money or not being able to pay for things that can cause us stress. So thank you so much for sharing that example. Thank you. All right. So Maggie.
So I think saving is important to me because like it paves my way to like my future. Because one day I'm gonna like move out, do my own stuff without my parents' help. So like I need to save money so I could do that stuff.
Yes, Maggie. Yes, definitely saving now. When I was all of your ages, I didn't really think about it, how to save my money, how to budget my money. So I made a lot of financial mistakes along the way. But the great thing for you all will get all the great information from this class today to help you prevent a lot of those financial mistakes in the future. And as Maggie said, preparing for that future, right? That first apartment, that first car, the job, even when you get the job, now how do you manage that paycheck that you start getting, right? So thank you so much for sharing. And then we also have Nina.
So saving is important to me because I want to get my first car, by myself. So in order to do that, I'm gonna have to save, and especially for a new apartment, like Maggie said, like I'm just really focused on my future and the things I have to do in order to succeed.
Thank you so much for sharing, Nina, right? So not just thinking about now, right? What we can spend our money on now, but what can we save for later? What can we save for the future? All great examples. Thank you all so much for sharing. So, which leads us into our next conversation, right? Thinking about goal setting, right? Whether we're trying to set goals now, we're trying to set goals later, setting financial goals, again, give you direction, right? Our GPS, and keeps us focused on building the financial future that we want, as Maggie and Nina was just stating, right? So when it comes to goals, it's first important to understand how our goals actually divided, how we break it down. How do we know, well, what should I accomplish and how many things should I accomplish? Is 5 goals too many? Is 10 goals too many? And when should I accomplish these goals, right? So here's a couple examples here and also the terms in terms the time frame for our goals. So if you have a goal that's immediate, that could be a goal that's less than 6 months. It could mean that you want to start, you have like a hobby and you want to be able to start making money off your hobby or maybe like a side hustle, that could be an immediate goal, right? Maybe opening up a savings account, or you want to start saving some money, about $5 per week. That could be a goal that you currently have right now. A short-term goal is a goal that's less than 2 years. It could be that maybe you just want to save for unexpected costs, just in case, like a rainy day fund in case of an emergency. Or maybe you want to save up for a laptop, or you want to save up for a car. And then you have where a short-term goal could be planning for your career, right? A lot of you earlier was mentioning a lot of great things that you're able to do, a lot of talents that you have. You might turn your talent into an actual career. Next, we have a medium-term goal. This is 2 to 5 years. So this could be going to college, earning your degree, maybe becoming an entrepreneur, right? Using that side hustle to start a business, or maybe saving up for a home. Now you have what's a long-term goal, right? This is really long-term in the future. This is 5 years or more. It could be that you want to start a family, become a homeowner, and start planning for retirement. So these are all examples here of different types of goals you may have, and also the time frame. So you have immediate, you have short-term, you have medium-term, and you have long-term. All right. So now we're going to go to page 4 and 5 in your journals, page 4 and 5. And it should look like this on the screen. It's pretty much just a roadmap. And with this, what we're going to do is we're going to write down some goals that we have and when we want to complete them by, right? So two things. We're going to think of a goal. So whether that goal is to buy a car, if that goal is to start applying for colleges, maybe to get a job, whatever that goal is that you have, you're going to, in the first top box, you're going to write what the goal is, and where it says complete by, you're going to put a date. So I'll give you an example. One of the goals that I still have, I think for every one of these sessions that I've done so far, is I really want to be able to cut down on debt. So my goal is I want to pay off my car. I'm very, very, very close, very close. And my time frame is March 2024. Right? So the first box, I would put that pay off car loan. Second box, I would put March 2024. So you all would do exactly the same. Choose a goal and then choose a time frame of when you would like to complete that goal. So for this one, you can choose up to one goal, all the way up to 4 goals is up to you. And then we'll actually come back together and then we'll talk through the goals that you have next. Okay. So it's now 7 o'clock. This one, let's take about 2 minutes for this one. We'll write down the goal, and then after you write down the goal, you'll put a time frame. All right. And then actually with this one, when you're done, just put a thumbs up when you're done. It may not take us 2 minutes, maybe a little less than 2. So again, you can choose however many goals as you would like. If you just want to put 1 goal, that's fine. If you want to put 4, you can put 4. Again, thumbs up when you are done. All right, great. I see a lot of thumbs up coming in. So this one will have 2 people share and someone that we have not heard from yet. 2 people we have not heard from yet. So I see Hector has his thumb up. So Hector, I'm going to call on you. You can share 1 goal with us, please, and when you would like to accomplish that goal.
So basically, for my short-term goal, it's to get a job and get a learner's permit so I could drive.
Nice, nice. A job and a learner's permit. Great, great goals. And when would you like to accomplish these goals?
In about 1 to 2 years.
1 to 2 years. Okay, so you're in the short-term goal range. Okay, great. Thank you for sharing. All right, one more person. One more person. Let's see. Mia.
Um, a goal I say is to get into a good college.
To get into good college. And when do you plan to graduate, Mia?
I graduate in 2027, so like
2027?
yeah, I'm
Okay.
a freshman.
And you're a freshman. Okay, so great. You have a medium-term goal. Thank you for sharing. Okay, so we all just did a great activity. We thought of a goal. We put a time frame. What are we missing? What are we missing? Raise your hand if you know what we're missing. Or you can type it in the chat.
I think they were missing obstacles.
We're missing obstacles. Yeah. So sometimes obstacles will get in the way of our financial goals. And I also saw that, was that Savan? You had your hand raised? Gian said in the chat why we want to pursue this goal. Yes, right? The motivation behind it.
Mine was just kind of like Gian's, like, what's your motivation and like how you're going to get to it. So
How you're going to get to it. And a plan, right? We're missing the plan. So now, how do we actually figure out a plan and how to create our goals? Our goals have to be SMART. Raise your hand if you've ever seen this acronym before, SMART. Raise your hand if you've ever seen the acronym SMART. Okay. So Savan, yes. All right. So I will break down for you all what that SMART actually means. So the S means that our goals needs to be specific. Any one of us can easily say that I want to be rich by tomorrow, but that is not specific goal. Is not even realistic, right? We need to think of a plan. Well, how will I get rich by tomorrow? Right? Is that possible to get rich by tomorrow? So asking yourself, what is it for? Where will it happen? And you'll see here an example. I want to have an emergency fund and a savings account. That's a specific goal. Next, you have M, which is measurable. Have a target that you can measure to see how close you are to your goal. So I want to have an emergency fund of $200 in a savings account. Next, you have A for achievable. Find the motivation, right? That you all were just saying. Find the motivation to accomplish your realistic goal, your realistic goal. So the achievable, I will save $10 a week for 20 weeks. Next, you have R for relevant. Create a reason behind your goal will help you drive to that goal, right? Will continue to motivate you to get to that goal. Knowing why is that goal important to you. And then last, you have time bound. An end date helps track progress to reach your goal, right? That's how we know if our goal is a immediate goal, if it's a short term, a medium term, or a long term goal. Our full sentence put together. I want to have an emergency fund of $200 in a savings account to prepare for the unexpected. I will save $10 a week for 20 weeks to reach my target by the end of this year. And ladies and gentlemen, that is how you make a goal SMART. If you go through your book, pages 6 through 11, you'll have the time. And not now because this takes like at least like 5 minutes. It could take more depending on how many goals that you have. But that is a little bit of homework for you all to be able to write down what your goals are. After you have the goals written down, break it down into a SMART format, right? Ensure that your goal is specific. Figure out the measurable, right? So if you want to buy a car, how much will that car cost, or what is the budget to buy that car? Then how will you save up money? Will you save up money weekly? Will you save up money bi-weekly? Are you working? Figuring out how will you achieve that goal to buy the car. Then relevant, why is it important to you, right? Why do you need a car? Why is that important? And then your T, time bound, giving yourself a time frame of when you would like to accomplish that goal. Again, that is on pages 6 through 11 in your journals. Now, when you think about all these goals that we have, a lot of times we have to create a budget, right? A lot of times it means that we have to spend less than we earn to be able to meet our needs. And a lot of you earlier mentioned the needs versus the wants. So I'm so happy that you all understand that our needs come first and then our wants come later, right? Now we're going to look at how you can create a budget that will help you save regularly and spend wisely. So first thing is when it comes to a budget, always know what's the income, how much money is coming in. And then how do you keep track of your money, right? So we have apps. Are you writing it down? How do you know how much money you have as you're spending? Next, you have your expenses. These are the things that we're spending our money on, right? These are if you have bills. If you don't have bills yet, you will in the future, near future, right? How do we prepare for unexpected expenses? And then when it comes to that budget, there's two numbers we now will have. We'll have our income number, we'll have our expenses number. We have to subtract the expenses from the income. Anything that's left over, that means that we have money to save. If there is nothing left over, now we have to start to plan. Now we have to start cut back, right? I believe was it Akelia that was sharing earlier about the Dunkin' Donuts, and she's like, I like to go to Dunkin' Donuts, but now I have to figure another way, right? So, for example, some people really like to have like coffee, tea in the morning. Can I make that coffee or that tea at home, right? Looking at this screen here is actually a great example showing you how making a small change can equal a big difference. If we spend $1 less every single day in 1 year, that is $365. Now, a lot of you probably thinking that's not that much, right? But let's go to the $5. $5 in 5 years, $9,130. If you like that amount of money, raise your hand or thumbs up. For some of the goals that you have. If you think that's a good amount of money for some of the goals that you have, raise your hand, thumbs up. All right. I see some virtual hands raised and I see some live hands raised and thumbs up. Yes, right? And then let's take it a step further. $10 less every day, right? In 10 years, $36,520, right? Some of you may have that goal in the future to buy a home, to start a business, right? Looking at this chart here, some of the changes that we can make, small changes again, that we can make, cutting back just a little bit to be able to reach our goal, right? We're currently at 7:10. We are going to take a break. You all were really great in this first session. And next, when we come back, we are going to focus on building and managing credit. So we'll be back at 7:20. 7:20. Enjoy your break. A lot of you will start to get a lot of things in the mail, a lot of lenders, banks, everyone's writing you. They want to offer you a college card. Does that mean that we should apply for every single card offer that we get? Thumbs up or thumbs down? See, Savon came in there really quick with the no. So no, right? We don't want to apply for every single person that offers us money. Again, it is borrowed money. We have to make sure that it's part of our goals, it's part of our budget, and also that we can pay them back, right? Because it is borrowed money, right? Knowing our score, right? So the really good news when it comes to our credit score, no one starts at zero, right? No one starts at zero. The lowest possible we could have is 300 again, and the highest is 850. But knowing what that range looks like is very important because that 3-digit number is pretty much going to be compiled to decide in terms of your borrowing ability, right? So when the lenders want to be able to let you lend money, give you a credit card, give you a loan, they want to give you a car, give you a house, your score is one of the factors that they use to determine that. Right. And again, we have it on the screen here. Our three main credit bureaus, Experian, TransUnion, Equifax. They're the one that gather all the information from everybody we borrow money from. And they're the ones that provide it to those lenders so the lender can now make a decision on whether or not they want to give us some more money. Okay. All right. So now how do we actually maintain and create a positive credit score? A lot of things you may hear, FICO is a system that is used, right? So credit bureaus, some of them use FICO. Some of them also use Vantage Score, right? So it's important that you also know about Vantage Score because FICO is like the most popular one. But with Vantage, you may not hear that often, but a lot of credit bureaus use it. A lot of apps, a lot of banks use this system. So today we'll talk a little bit about that, right? So Vantage Score, this one in particular is 3.0, and Vantage has about 6 systems. FICO has about 16 systems. So the first thing that we must always do when it comes to our credit is pay on time, right? Pay on time. Pay your bills on time could help you build your credit. Paying it not on time could definitely help you lower your credit, lower your score. And that is something that we don't want because it stays on our credit report for a while. Okay. So a lot of times when it comes to payment history, you'll get a credit card bill in the mail. They'll tell you have a minimum payment. If the minimum payment is $50, minimum payment is $50. And you have to make sure that you pay by that due date. For example, today is October 17th. If that credit card bill was due today by 5 p.m., you have to be sure that you paid by 5 p.m., not 5:01, not 8 p.m. You have to make sure you pay specifically by that cutoff time. The best way to avoid paying late when it comes to our credit bills, we can either do auto pay, which they'll learn in the future. Nobody likes auto pay, but auto pay is very beneficial. Or you can schedule that payment to ensure that that payment goes on time. And again, ensuring that you pay that minimum payment because it is 40% of your credit score. Next, we have 21% of our score, which is the credit history, right? This is the length of credit history and then also the types of credit. So when it comes to maybe like a credit card that you may have that you've had that credit card, let's just say for about like 10 years. If you close that credit card at some point in time because maybe the interest rates are really high, it took you like about 10 years, you finally paid it off. Once you close out that card, you actually closed out 10 years worth of credit history. So you want to keep your accounts not only in good standing, but the ones that you had for a long time, you actually want to keep them open. Something that's really positive when it comes to credit history and maintaining that length of credit history is outside of paying on time, the credit cards that maybe you don't really want to use, you don't want to have a high balance on it, you can use that for like a recurring charge, right? Maybe like your cell phone bill, maybe something that you just get gas on it and then you notice a small amount and then you'll pay it every month. Okay. When it comes to credit, you want your score to be moving and you want your score to not stay stagnant. You have to actually spend the money and then pay the money back. Okay. Again, with that credit history, it's important to keep those accounts in good standing and also the ones that you've had for a long time. Something else when it comes to that 21% of your score for the credit history is the types of credit. Lenders like to see that you have a mixture, right? That you have like a credit card, maybe you have student loans, maybe you have a car loan, because then it's like, okay, so everyone else is letting you borrow money. Everyone else see that you're responsible with money. I also want to let you borrow money as well. Okay. Now we have credit usage. This one is very important because although our credit card may have $1,000 limit, does not mean that we should be maxing out $1,000. Doesn't mean we should be using $1,000 every single month. For credit cards, you want to use it for large expenses. You want to use it because you actually need to use it, or maybe you don't necessarily, it's not in your budget for the month. For example, maybe you're traveling, right? Maybe you want to rent a car. Maybe it's to pay for a flight. And you know that you'll be able to pay over time. But also the usage on that card, you want to try to maintain that usage 30% or less. And this is definitely one of those gems that I was talking about earlier. You want to write down when you have a credit card limit. For example, the credit card might approve you for $1,000. So you want to have your month-to-month carryover balance 30% or less, meaning that carrying over maybe $300 or less. Now, it's possible that you may have used $500 or $600 for the month, but by the time that next bill comes, you want to have it paid down so that your balance usage is showing 30% or less. And you want to use this to apply this to pretty much any credit card that you have to maintain a positive credit score, maintaining 30% or less. All right, now we have balances, right? This is 11% of your score. This is for everything that you owe, everybody that you owe, and it's a total, right? So if you have student loans, if you have credit cards, you have a car loan, in the future, you add on like personal loans, you add on line of credit, you add on mortgage, they add all those balances up together, right? And that's also for bills that maybe you have not paid. I didn't even mention collections yet, but collections is having debt that is way beyond past due, someone else, another company brought out that debt that also will be considered part of your balances, right? Whether it's current or past due, and that will be 11% of your score. You'll see it says tip, keep your low credit card balances. It will show you are not reaching your credit limits. So again, if we're using that 30% method, we won't go over that amount or not have a negative impact on the total balances. Now we have recent credit 5%. This one is very, very important. This was like when I was saying to you all, you're going to start getting letters in the mail at some point in time. Everyone's offering you credit cards, right? So recent credit 5%. If you've ever heard the word credit inquiry, ever heard the word hard credit check, it's a red flag attached to it. Always picture a red flag, right? The red flag meaning that this means hard credit inquiry, hard credit checks. You do lose points. You lose points because you're applying for new debt. The other part to this is when you apply for new credit, just know that whether or not you got approved for that debt will last on your credit report for 2 years. So we have to apply wisely, apply for things that you actually need, apply for credit as you need it, right? Too many accounts open at the same time could lower your score, right? Too many accounts open at the same time could lower your score. Next, we have available credit. This is 3% of your score. This is for the amount that you haven't used. Again, if you're able to maintain that 30% or less, you'll be able to meet this category because then you'll have a portion that's available to you. More available credit is actually positive towards your score as well. It's showing to lenders that you are not overusing or overspending on your credit cards. All right. So earlier we were talking about interest rate. Brianna gave us great definition on interest rate, and you'll see here it pretty much shows it's the amount a lender charges to borrow money, right? So it's an additional cost to what we already borrowed. I also mentioned the term earlier, annual percentage rate or APR. This is the yearly cost of borrowing money, which also can include fees. Understanding interest rates is very important because it's attached to student loans. Interest rates are attached to credit cards, any other credit account that you open. It's important because it will show how much you're charged for the money you are borrowing. The money you repay is usually more than the amount that you borrow, right? Sorry to break the news, but interest rate means we're paying more money on top of what we already spent. All right. Everyone loves to see this, the breakdown. When you start to check your credit score, you'll want to know, well, where do I fall? What is my credit like, right? So we have the range here, and I quickly go through it. 300, 659 is poor. I don't like poor, so we're going to say work in progress. 660 to 719, that's fair credit. 720, 779, good credit. 780 to 850 is excellent credit. So you can type in the chat, where would we like to be? On this range here, where would we like to see our credit? Where would we like to see our credit? Or feel free to come off of mute. All right, I see excellent coming in. Okay, great. Yes, excellent, right? And I'm sharing a lot of great tips to be able to ensure that we get our credit to be excellent as well. All right, excellent, good or excellent, 788, 50, great. So here on the screen, I'll show you an example. Another reason why it's important to have good credit, outside of being able to have access to additional money, more money, buy a house, buy a car, having good credit actually helps you save money. If we have right now, all of us get like $1,000 loan at a 580 score, we're looking at a 28.5% average interest rate. Now, this is a red flag. This is really high, right? Somebody at 719, though, their interest rate is at a 13.5%, which is way better. And then I'll break down the interest rates down to money, right? Down to actual dollars so that it makes a little bit more sense. Monthly payment at a 580, that's $42 a month. Approximate numbers, $719, $34. You're probably thinking that's not that much of a difference. But the difference comes in by the time for you to pay off that loan, right? So you start off at 1,000, at a 580 score, you'll pay almost $500 more at the end of the 3 years because your score was lower. The person at 719, they're saving money, right? Because they're paying only $1,222. So almost a $300 difference because of having a better credit score. So a lot of times too in the future, when you start applying for things, you'll notice that sometimes with a car dealership, right? They'll have signs that say good credit, bad credit, no credit. They'll let you buy a car. And it's usually like one of those things where you really need the card, so you'll pay whatever they tell you, but knowing that if they're basing it off of your credit score, they're basing it off of your credit history, credit report, more than likely the lower your score, you'll pay more. And that's the same thing with like department stores, Macy's, Target, Home Depot, all those stores, they offer credit cards. But again, the better your score, the better opportunities you'll have when it comes to rates and overall the fees and everything else that you will have to pay. Right now, your credit report. Why should you care about your credit report? It's like your report card, right? You care about your grades, you want to care about your credit report. It's what the lenders use to be able to track the payment history. Have you been paying on time, right? Because if you don't pay on time, the lenders will report it to the credit bureau. The credit bureau now will report that to anybody else that you try to borrow money from. So whether you try to get a student loan, if you try to get like a car, you want to go buy a house or get a personal loan, all these things will come up on that credit report, right? So it's always important to maintain an accurate credit history, a great credit history, and manage your score. Now, these are all the people that can see our credit reports. So when I first started working in banking about a little over 10 years ago, my job, it was a requirement. They had to check my credit report in order to be able to get the job, right? I've also worked with people over the years that they weren't able to get a promotion because they didn't meet the credit standards. Now, usually with employers, they're not going to tell you what the standard is, but if you don't meet the standard, they'll tell you that either you miss out on the promotion or we'll give you like a certain amount of time to be able to improve your credit. So for all of you that if you're not in the workforce, but at some point in time you do plan to start your career in the near future, think of that credit background checks also exist. You have landlords. A lot of you earlier was mentioning about getting like that first apartment, preparing for the future. Landlords want to be sure you have good credit because if you are paying your credit bills on time, more than likely you will pay the rent on time, right? We associate credit, we associate it with accountability, we associate it with character, right? Doesn't mean you're a bad person, doesn't mean that you'll have late payments, but it's a way to judge in advance whether or not you'll be able to pay these bills on time. And then also you have banks, you have lenders, right? Anybody that you choose to borrow money from, you have insurance. So that house, that car that you have, yes, you may own it at some point in time, but you also need to have insurance. So the insurance company may say, oh, you don't really meet our credit standards. You have to pay a little bit more. Or utility companies, right? If you don't meet their standard when it comes to credit, they may say you have to pay like an initiation fee or something like that. Like I know a lot of gas bills, for anybody, PSNG that's in the state of New Jersey, that's one of their PSNG, that's one of their requirements. You have to have a certain credit standard or they make you pay a certain fee up front. All right. So this is some of the information that they can see. They can see all of your accounts. They can see what's in good standing, what's in bad standing, poor standing, credit and credit bureaus, credit reports, credit scores. These are like the things that we cannot hide from. Right. So you always want to make sure you're keeping a positive history. They can see your statements, right? They can see any public records, anything that has not been paid, anything that's in collections, credit inquiries. Every time that you apply for new credit card, that will show up on your credit report. Okay. Anytime you apply for new credit. When should you request your credit report? So there's no specific time frame. However, you want to do it if you've never done it in the future, at least once a year. I'll share it with a resource with everyone. A great website. It's annualcreditreport.com. Annualcreditreport.com. That allows you to be able to get your credit report from all three credit bureaus for free every 12 months. There's actually a federal law with that. You always want to make sure that credit report, the information is accurate because there is something called identity theft, unfortunately, where someone can have a credit card in your name, a car in your name, or just purchase something without you knowing. You want to be able to protect yourself. The best way to do that is by checking those credit reports. There's also a lot of great free apps out there. Some of the apps, like for example, Credit Karma is probably the most popular one everyone knows. Credit Karma doesn't give you all three credit bureaus, right? They give you TransUnion, gives you Equifax, it doesn't give you Experian. Experian, however, does have their own app that does give you your credit score and report for free. Most banks, most lenders also give you access to a free credit report, free score as well. And your credit report, the website that I provided, that one gives you access to all three credit bureaus in addition to the credit reports, just not the credit score. Okay. Now you're probably thinking, I don't even have a credit report. I never thought about credit. I've never applied for a credit card, and that's okay, right? The only way to really know, like for example, like the juniors and seniors, if you want to start being able to just know, get in the habit of checking your credit and knowing the process, definitely visiting that website, annualcreditreport.com, using those resources. In addition, for everyone else, again, asking your family about adding you as an authorized user to start building your credit. Now, we're going to do a little bit of activity to decide, should we use credit or should we use cash or our debit card, right? So it's always a decision that you're going to make in the future when you're thinking about what your budget is, how much money you have. And thank you so much, Latoya, for putting it in the chat. There's going to be a decision that you're going to be making in the future. So if we want to cover our travel expenses to go home, would we use cash debit or would we use our credit card? Feel free to use the chat. Cash debit or credit card? Cash. All right. Yeah, with this one, to cover travel expenses, right? Could just be a quick ride home. It could be like you're taking an Uber, taking a Lyft. Yeah, this one is okay. We would use cash, right? We're going out with our friends, right? Just a night out, going to buy some snacks. Would we use cash debit or would we use our credit card? All right, I see cash. Yes, right. We'll use cash, right? This one is not like a large expense. We'll use cash. And as long as, of course, we budgeted for it, right? Again, needs first. One second. All right, this one now, your car needs some repairs, right? So now we own the car, but the car has those unexpected costs that come up, right? Something with the engine, maybe a tire blew out. The car needs repairs. Cash debit or credit card? All right, I see credit card. Yes, because this one might be not in our budget, and now this is a larger expense, so we would go towards the credit card. All right, now we have a laptop that we see at Best Buy. We really want to buy it, right? The store is giving us an option, 0% financing for 18 months on that store card. Would we use cash debit or would we use a credit card? All right, really good. Credit. All right. So they're giving us 0% for 18 months. Of course, we're using the credit card, right? We're not paying any extra additional interest on top of what we're borrowing as long as we pay back within that 18 months. Really great. All right. So in your journal on pages 19 to 20, feel free to get a lot of information in terms of checking your credit report, access resources for credit. At Chase, when you all start building credit, Chase has a great service called Credit Journey that allows you to be able to check your score. In addition to checking your score, also allows you to be able to check your credit report, who you owe, how much you owe, and all of that great stuff. So now that we have covered a lot of information, a lot of topics, this is time for a question Q&A session. Please feel free to ask any question over what we reviewed, or feel free to share something that you've learned. Something that you learned overall tonight that you did not know about before. So consider this.
Tamara,
Yes.
I'm sorry, before even someone answers, I failed to turn the recording on at right when you were going over the credit activity that we did. Would you mind just sharing that slide just for those who want to rewatch the recording? They will see like the definitions of the credit bureau, credit report.
Sure, I'll pull that back up right
you.
now. In the meantime, everyone, feel free to start raising your hand to ask questions while I pull that slide back up. So we can type some questions in the chat. All right, Brianna has our first question.
So basically, if anyone doesn't have like a credit, a credit card or anything yet, and they want to have like start building up a good credit score, I know you said something about like parents or something, So I was like wondering what you would recommend to start early on.
So authorized user is the term. So if you want to ask your parents to start, tell your parents, you want to start building your credit. Again, this is like one of those topics that you want to be sure that they know what the authorized user is. So explaining to them if they don't know what the authorized user is, but it doesn't mean that they're handing you a credit card. You're going to start making purchases and making a lot of expenses, but necessarily that you'll be building credit history off of the credit that they're already building. So it's called authorized user. Parents usually get upset with me when I mention this because, of course, all the kids usually go and ask, but it's a great, great resource to start building credit now. And great question, Brianna. So the term is authorized user. And
Okay.
Latoya, just want to be sure this was the screen you were referring to.
I think it was the one before this one where it had the wiggly lines that
Oh,
pointed to
okay.
the correct definition. Yeah,
This one.
there you go. Thank
All
you.
right. You're welcome. Yes, Savon. You're on mute.
Oh, hi. So one thing I think that I learned is just like what makes up part of your credit score. Like I didn't know the parts of it, so that was cool.
So breaking down the actual chart, right? Having a good payment history, having credit history over time and not closing that out. Great call out. So that was a great takeaway from you. Okay, good, good. And remember 30% or less with our balances, okay? 30% or less. Thank you for sharing. And yes, I see in the chat we're talking about it. The highest score, 850 is the highest score. Lowest is 300. Yes, Mia.
About the like 30% credit thing, can you like re-explain it?
Sure. So let me actually go back to it here. So the 30% means that, for example, if you get approved for a credit card and you get approved for $1,000. So when it comes to your balances, what you're carrying over to the next month. So for example, if you made purchases, like you bought let's just say some like sneakers, you bought some like makeup, stuff like that off of your credit card, right? And you want that balance to reflect 30% of whatever the total limit. So if your limit is 1,000, you want your next bill to show $300 or less. So that we're using the $1,000 as an example, but if your credit card limit is more than that, if it's 2,500, calculating, okay, what's 30% of 2,500? What's 30% of $5,000, right? However much they approve you for, that's what you want to be able to calculate 30%. And then by the time that next bill come, you have to be sure that you pay off enough so that it reflects 30% or less.
Okay then, thank you.
You're welcome. And great question, Mia. Great question. All right. Any other questions? Gian, yes.
So I wasn't here towards the start, so can you like recap what we did towards the start of the class?
So great question, Gianna. Thank you for sharing. Who can recap for Gian, right? What we talked about in the beginning. And so you saw the credit portion, you didn't see the first class of goals, budgeting, and saving. Correct. Okay. So let's see. From your peers here, from other scholars, who can share with Gian what we talked about? Some great takeaways. Savon, take it away.
So in the beginning, we pretty much just talked about goals, setting goals, and then needs versus wants. We showed some of the goals that we wanted to achieve. Then we started talking about SMART goals, which is specific, measurable, achievable, relevant, and time-bound goals. And then we just broke that down, got into like budget, and then I think you were here for when we started talking about like credit and stuff like that. So yeah.
Great, Savon. Thank you so much for sharing. Thank you for recapping for us. And Gian, we also have the financial journal that hopefully have access to it. That also recaps a lot of the things that we discuss, the SMART goals, the goals, budgeting and saving tips as well. And again, thank you, Savon. All right. Any other takeaways? Any other takeaways? And just so that everyone knows, in the chat, Latoya also put in there is a survey based off of what we went over today, the class. You all again, really, 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 really great engagement, great questions, great responses. I don't know, Latoya Rosie. This might be one of the best classes so far. I don't know. I don't know if I'm speaking too soon, but definitely a great, great group.
Yes, they have been absolutely fantastic, very engaged, eager to learn, as you can see, asking tons of great questions. So yes, I would agree.
Great, 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 great. Any other questions for me? Any other questions? All right, Brianna.
Okay, I'm sorry, I have a lot of questions.
Okay.
So, this is just my last question though. So I learned about credit and credit score, and then I didn't know so much about credit report, and it says like you defined it as your track record of credit payments over time. I was just wondering, like, if the information is like for life, or like how long does that duration of time last?
Oh, really, really great question. So some things are on our credit report. For example, if it's balances, current, past, those are however long you've had those credit accounts, those will be on those credit reports. Things like credit inquiries or hard credit checks, which are the applications or the new credit that we apply for, those things will be on our credit report for 2 years. Okay. So what specifically shows in your credit report could vary, but expect that if you have a balance, if you owe a lender, if it's past due, or if it's current that you're paying on every month, all those things will show in the credit report. It also sometimes they show things like, depending what bureau you're pulling from, they'll have stuff like previous employers, jobs that you work for, addresses that you lived at as well. Some of the credit bureaus report that information too. Really great question. I don't think I've ever been asked that before. Really great question. I know you said you had a few questions. Was that the only one?
I mean, I think I kind of answered it myself for the other questions. I reviewed my notes.
Okay, really good. And again, those journals are really, really great resource for everything that we talked about today. So please feel free to access it at any time to get that information, or just, as a refresher. Any other questions for me? Any other questions for me? All right. Again, I want to thank you all so much for your time. I hope that you all have an amazing, amazing school year. For those that'll be graduating in 2024, congrats in advance. Thank you again to S.O.A.R, Latoya, Rosie for having me tonight, and everyone else from S.O.A.R. Please feel free to, reach out to me. I'll make sure that I complete my survey on my end. I hope that you all get a chance to complete your survey. Again, you scholars were amazing this evening. And I'm looking forward to seeing all the amazing things that you all will do in the future, right? And I hope you all have a safe year. Thank you.
Thank you, Professor Tamara. This was absolutely wonderful. We appreciate you taking up the time again and again and again to teach our scholars. We really do appreciate it. Thank you so much. And scholars, we will be here if you have any questions. I did put the survey, the scholar survey in the chat. I could drop it in one more time. If you need to head out, that's fine. But we are here if there are any additional questions about anything that was, taught tonight, or anything about business and entrepreneurship overall. We'll be happy to answer any questions.
Hi, I had a question. Okay, so this has nothing to do with what we learned today, but it has to do with what we learned before. So this is my pitch, my elevator pitch. I just want to see if it sounded right, because I was like having some problems configuring the name. Because can you hear me properly? Is everything okay? Because I was like having some issues. Okay. So I was like having a problem understanding what I was going to name it, because I'm not selling a product. Essentially, I'm the business, because I'm doing public speaking. So I changed the name and everything like that. So here it is. I'm just a 15-year-old girl who fell in love with my culture, and I'm here to teach the youth about how to fall in love with theirs too. Well, some may ask, how do you do that? You open yourself up to exploring your culture, and I did that by joining the Schomburg Junior Scholar Program and starting a club at my high school called the Black American Culture Club. I go out and speak to the youth in our generation about how to spread awareness and let them know that they are enough. My business intertwines with my personal experience and provides education when it comes to connecting people through spoken word. It only costs your time, vision, and creativity. You can find us at www.youareenough.com. I'm Savon Johnson, and my business is You Are Enough because I realize I'm enough, you're enough, and we are enough. That was it.
I like it. I like it. And short and sweet. I even put the timer on really quickly to just kind of gauge how long it took you, but you were right within the time frame. I really love it. You gave where they could find you. You gave your why. You introduced yourself. I guess the only thing initially I was like, oh, okay. But I think as you continue to explain it, I understood it. But when you first said, I'm just a 15-year-old, I was like, doesn't sound like super positive. Like I'm just 15. Like, no, I'm a 15-year-old, like just a bit more confidence in the beginning. But other than that, it was really good. You're really on the right track. I would say, yeah, just tweak it a little bit in the beginning, but yeah, you nailed it.
Okay. Thank you guys so much. Have a good night.
You're welcome, Savon. Thanks so much for staying. See you Thursday.
I see you Thursday.
Good night, everybody. Great class, Tamara.
Good night.
Thank you so much. Good night, Toya.
Thank you. Good night. And Latoya, I put my email in the chat to you.
Yep,
right.
I
Have a
got
great
it.
night.
Thanks, Tamara.
Thank you. Have a
too.
good evening.
You too. Bye-bye.
Thank you. Bye.